Welcome to the Business Finance Bulletin, episode 167. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, managing working capital for growth, Bank Referral Scheme under review, and business confidence at a 4-year high. When it comes to planning and implementing a growth program, many business owners think it's all about the sales and marketing side of it, filling up the funnel, converting customers. Well, yes, it is. Obviously, that's a vital aspect of growth. But one thing many business owners do miss is the impact that growth has on working capital and how you can better manage working capital or cash in order to ensure that you grow safely. Well, this is one finding that's come out from a recent survey from the Lloyds Bank commercial banking team. They interviewed about 650 business owners to see how they do manage working capital. And Lloyds Bank have worked out that currently businesses are sitting on excess working capital to the tune of £498 billion. Yes, that's money tied up in stock, overdue invoices. All of these things are great in one way in that it kind of demonstrates a good, viable, growing business, but of course it ties up valuable cash. And the thing that's come out of the survey is, well, why are businesses suddenly sitting on surplus working capital? Well, first of all, many businesses are continuing to see growth in turnover, and naturally that drives up overdue invoices, so cash is tied up there. Also, with inflation starting to come through, many business owners are now beginning to stock up to take advantage of prices before they go up. Again, that has an impact on working capital. So the key thing is to remember that when you're growing a business, yes, it's important to watch out your margins, making sure that your margins still remain positive and in growth phase, but do not ignore the cash flow side of it and making sure that you're better managing your working capital. Now, quite a while ago, I did a series of videos looking at how you can improve management of working capital in 3 areas: a better management of your debtor book, stock, and also managing your creditors. So if you want to revisit those videos, and also there's a podcast version as well for you to download and listen to in your car, I've included a link in the description box below where you can watch those videos and download those podcasts. So remember, when you're going for growth, it's not all about margins, it's also about managing your cash position. If you've been a regular follower of this bulletin and podcast, you will recall during 2015 and 2016, I was mentioning the Bank Referral Scheme. Now, back in 2015, as part of the Small Business Act, the government put in a piece of legislation which was going to force banks to refer clients to designated bodies where the bank had said no and said they couldn't help the client arrange finance. The idea being that if a client did walk out of the bank, at least they would have an alternative in the back pocket to go and speak to somebody. Well, this Bank Referral Scheme was rolled out in November 2016, with banks mandated to pass on their no's to one of 3 platforms, being Funding Options, Business Exchange, and Biz4Tech. Those 3 platforms would then go out on behalf of the client and speak to a host of alternative lenders, which it means that at least business owners had an option if the bank couldn't help. Well, of the 9 high street banks that were officially part of this scheme, the Treasury now feels that it doesn't seem to be working that well. It transpires that perhaps the anticipated flow of introductions to those 3 platforms hasn't been as great as it thought it would be. So what it's decided to do is undertake a review. So they've appointed a guy called Professor Griggs, who's going to have a look at this system to see what the blockages are, what is preventing banks passing information on. It could be as simple as business owners have said no, they don't want their details passed on and that they'd rather go and source finance themselves. Well, it'll be an interesting exercise to see what are those things that are stopping banks referring business, and watch this bulletin, and so once that review comes out, I'll be sharing the findings from it. Confidence amongst small business owners is at a 4-year high. That's the findings from a recent survey carried out by Smith and Williamson as part of their quarterly enterprise index. Yes, the first quarter of 2017 survey found that optimism levels amongst business owners is at a 4-year high, which is good news considering everything that's going on around Brexit, the economy, and as I record this, the forthcoming election. Of the 200 business owners surveyed, 85% of them said they are planning to grow over the next 12 months. And 80% of them said they are feeling very optimistic about their growth plans and prospects generally. But more importantly, 65% of them said they are planning to increase their headcount, which is of course very good news and a real sign of confidence that business owners have about their future. However, from the government's point of view, it isn't all good news because only 45% of the business owners surveyed said that they felt they were getting good support from the government. So many of them feeling they've been a little bit left behind. So a clear message there for the government that they need to be listening more to small business owners about what they want. So in summary, a really good, strong, optimistic feeling of confidence amongst business owners, which of course is great news. Well, that's it for yet another bulletin, and thanks very much for being with me. Please don't forget, if you're watching on the video version, you can also get the podcast version available on iTunes, SoundCloud and Stitcher. And if you are listening on the podcast, pop along to my YouTube channel, go to YouTube and search for Rob Warlow. So that's it for this week. Thanks very much for being with me. Look forward to being with you again next time. Bye-bye now.